Hello, my name is Stephanie Cavanaugh and I'm a CPA. I've been doing tax and other financial services for over 20 years. Today I'd like to talk about taxes for rideshare workers, Uber, Lyft, etc. Two of the biggest mistakes I see are properly reporting income and making sure that you can take advantage of all the expenses available to you. The first one I'd like to go over is income. As a 1099 contractor, you will be getting a 1099K from whoever you've been working for, Uber, Lyft, etc. And if you got bonuses, you may be getting a 1099 miscellaneous as well. When you go to report your income on your Schedule C, you need to make sure that you add these amounts together. Now, one of the things you may notice right off the top is that when you look at these two amounts, they don't match the deposits in your checking account throughout the year, and that's okay. Some people also mistakenly believe that since this amount is higher than what has gone into their account, that means the rideshare company has already withheld taxes for you. They have not, I promise. What they have withheld are fees. So we will take the fees off in the expense section, but under your income, in order for it to match with the IRS, you must put down the full amount of those 1099K and 1099 miscellaneous amounts. And that's all there really is to income. Very, very simple. Next, we'll look at expenses. Of course, the very first expense we'll be taking off will be your fees. And generally, the rideshare service will give you some type of summary to let you see what your fees, mileage, etc. were. So, first thing, fees. The second thing you need to look at are your vehicle expenses. And there's two ways you can do this. One of them is by doing the standard mileage rate. The other is your actual expenses. Now, 9 times out of 10, the standard mileage rate is going to be your best bet. For last year, for 2019, the standard mileage rate was 58 cents per mile. So, if you're using the standard mileage rate, all you have to do is take the number of miles driven for your rideshare company and multiply that by 58 cents. And when you do this, you'll see that's a pretty substantial amount. The other thing you can do is the actual expenses. If you decide to do this method, then you need to have kept track of your receipts, and this will include your gas, your oil changes, brakes, any type of repair and maintenance, your interest if you're financing your vehicle, your lease payment if you're leasing your vehicle, depreciation on the vehicle, etc. There are a lot of things to keep up with, and even after you keep up with that, like I said, 9 times out of 10, you're still going to come out ahead using the standard mileage deduction. Now, one other mistake I see people do with this is they try and take both. Please remember you can only take one. Okay, next, some exceptions for you that you get to write off for your vehicle, even if you take standard mileage, other industries can't do, are car washes, tolls, and some parking. Because your car has to be clean at all times for your passengers, you are allowed to write off your car washes, whether it's once in a while, you have a monthly membership, you need to have it detailed. Even though you're getting reimbursed from the rideshare company at times for that cleaning, you still need to go ahead and write off the expense so you don't get taxed on that amount. The next thing is tolls. If you live in a state such as Florida that has toll roads everywhere and you have to take them to bring people, say, from the airport to Disney World, you're allowed to write that toll pass off on your vehicle. The other thing is parking. Maybe you live in a larger city or you live in a condo where you have to pay parking garage rental fees for your car at night. You don't have a driveway. You're allowed to write off that parking garage rent as well. The next thing for you to look at are the snacks that you're buying for your passengers. I've seen most rideshare operators keep crackers, candy, water, etc. in the car for their passengers, and you are free to write all of that off. One important thing you need to do is to make sure that you put that under supplies, not meals. If you put that under meals, you're only going to get 50% of your deduction. Put it under supplies so you can get the full deduction. The next thing is your cell phone. If you have your own private cell phone, you can write off your entire cell phone bill. You can also write off your equipment, the phone itself, the case, protector, whatever you need to mount it, chargers, all of that. If you're on a family plan, you can still write off your section of that cell phone bill. And don't forget other miscellaneous items you can write off. Maybe you keep a car seat in the back of the car for when you have someone traveling with a child. Maybe you keep a small vacuum in your car to do quick touch-ups. Just general office supplies for you to track everything. Your tax fees, all of that can be written off. So make sure you keep up with that. So next, let's say you now feel comfortable going ahead and we're going to start doing your taxes. If you feel good doing it yourself, and I honestly believe most of you can, then please take advantage of one of the free tax softwares out there online. They do everything the paid box softwares can do that you buy from Office Depot, but they're free, quite frankly. A lot of people will go ahead and buy the box version from Amazon, Office Depot, but when you do that, generally the only reason you're doing it is so that if you run into trouble, you can ask an accountant for help. Well, by the time you bought the software and used that feature, it would have been cheaper for you just to bring it to an accountant. I also strongly recommend bringing it to an accountant that works year-round, not someone in a pop-up shop who's just around for tax season. And the reason I say that is if you work with someone who is doing tax year-round, they're there all year round to help you with any questions you have. Maybe you want to branch out into another line of business. Maybe you plan on changing your regular W-2 job. Maybe you're starting a family, maybe you have a child going off to college. If you work with someone who's there all year, you can ask them those questions all year. One other thing for you to look at if this is your very first time doing taxes and you're a little scared, go ahead, do it yourself online with using the free software, just don't submit it. And at the same time, go ahead and send your taxes to an accountant and let them prep and submit them for you. And a good accountant at the end of the day will take what they had and what you came up with and help teach you the differences on why yours didn't match. And if yours did match, great, you know you're good to go in the future. Now, if you found this video helpful, please like, subscribe, share to anyone you think could benefit from this. Thank you so much for watching all of this. If you have any questions for me, please feel free to leave them in the comments. I'll make sure I reach out to every one of you. Thank you so much. Goodbye.